Now we are moving to our next concept. Okay, so for that I'm using investing.com site, okay, where I have signed into investing.com, and now I'm going to charts. Below charts, I will click live charts. So once I click live charts, live chart will open. So here you can see here, this is full screen mode. I click on the full screen and I will add the widget. So this is where we will get the chart. And at the top of the left side, you can type whichever stock you want to see the chart. So I'm going to open now Nifty 50 chart, Nifty 50 index NSE. Okay, so now first I'm going to add volume indicator. So here I have to come here. You can see the cursor here. Please observe the cursor. Click on indicators and type volume. So you have to take plain volume. Click on the volume. Volume is appearing below the chart. And you can see here volume is here also. I will go to format and I will just increase the brightness of the black color line. Okay, and here you can see here, this is actually volume. There will be a black line in the volume. It is actually a 20-day moving average volume. Okay, so what we have to observe in volume? In volume, we have to just see whether the volume for the each candle below the volume is there. No, each candle, if volume is more than average or below average. So how to identify it is below average or more than average? It's very simple. If a volume is above the black line, then it is above average. And if a volume is below the black line, then it is below average. So this is above average and these are all below average. So that is what we have to identify whether the volume is above average or below average. Right? So now we will move to next indicator. Right? So now we are going to add one more important indicator called as moving average exponential or exponential moving average. Just you type on EMA, you will get moving average exponential. There are two types of moving averages are available. One is simple moving average and second one is exponential moving average. We will always use exponential moving average. Why we use exponential moving average? Because exponential moving average will give more weightage to the previous close, right? So I'm going to add click 1, 2, 3. 3 times I have added this. Okay, now I will go to first EMA format, click on the format. I will change this to 5 time period EMA. Color, I will make it as red and I will increase the thickness. Likewise, next EMA, I will click input. I will change it to 10 period moving average and color, let it be blue and I will increase the thickness. Third EMA input, I'm going to change it to 20 period moving average and I will change the color to black and increase the thickness. See, here I have added 5-day moving average. If since I am actually looking at day chart, daily chart, each candle is of 1 day. So moving average also will be calculated depend upon each candle. That is now it will be 5-day moving average. First one. Second one is 10-day moving average and third one is 20-day moving average. So all the three moving average we have applied. So and why 5, 10 and 20? Because in a week 5 working days are there in stock market. Stock market will operate from Monday to Friday, 5 days. If you take off of the month, it will be 10 days working will be there. And if you take complete 1 month, 20 days working days are there in the stock market. That's the reason we are actually choosing this 5, 10 and 20 moving averages. And you can see here one more interesting point is whenever you see 5 is crossing below 10 and 20, then it is sell. I will write this. You can see here 5 is red color, 10 is blue color, and black is 20. Okay, so now 5 is crossing 10 and 20, black and blue and black. So it is actually sell. It is actually sell signal. Okay, here it is given sell signal. But you can see here again, price is crossing above 5 and 5 is crossing above 10 and 20, right? 5 is crossing above 10 and 20. Here this means it is here buy signal. Buy signal. Likewise, you can see here again 5 is crossing above 10 and 20. Again, this is buy signal here. Right. And you can see here 5 is crossing below 10 and 20. This is sell signal here. This is sell signal. Most of the traders will do buy sell depend upon this moving averages, but we should not do because it will give late entry to us and it will give late exit to us. So we will enter late and we will exit also late. What it means, we will enter after late, after maybe after a lot of price fall, we may sell here. But again, we will buy back after price increase, lot of price increase. Afterwards, if we'll buy back, that is not good. It is always dangerous. So we will use EMA not as seller buy signal. We will use EMA to identify the trend. If it is 5 is crossing below 10 and 20, for us, it will be downtrend. If 5 is crossing above 10 and 20, then it is uptrend for us. So to identify the trend, we will use EMA, right? But we will not use EMA to take sell and buy decision. Clear?